Hey, so today I'm in front of a branch of RBC, the Royal Bank of Canada, and on today's episode of Middle School Money Matters, we're going to be talking about Canadian banks and the banking system.
The idea of banks has really been around for centuries, and it was really born from the demand for and idea around credit. The concept that you can borrow money now and repay it at a later date. Initially, this credit may have been offered by merchants. People would come into a merchant and ask for some goods and ask to pay for it at a later date. And as this became more of a business, it necessitated a larger organization in order to keep track of all these transactions. And that's where the banks in Canada were born. Let's look at a little history. While coinage and money have been around for quite a long time, Canada as a country has not. So back in the 1700s, when Canada was still known as New France, the merchants around the East Coast issued something called bonds, which was essentially an IOU to the company. And this was the first, where we first saw credit emerging in Canada. These merchants amalgamated, creating early banking institutions such as the Merchants Bank of Halifax and what would eventually become the Bank of Montreal and the other main Canadian banks. Interestingly enough, at the time, all these banks used their own forms of currency. So one of the tasks of Confederation was to streamline the country's monetary policy and currency. So the existing merchant and charter banks were given permission by the government of Canada to produce certain amounts of currency to be used around the country. And they had to accept the currency from the other institutions. That was part of the deal. This continued all the way up until the 1930s, when the official Bank of Canada was created. Once the Bank of Canada was created in 1934, they began to phase out the currency that was being created by the banks and move towards having a unified national currency, the Canadian dollar, produced and supplied by the Bank of Canada as opposed to by the chartered banks themselves. And by the mid-1940s, the other currencies had been phased out completely, and we had one unified currency across the country. So as mentioned, the banks were really born out of a need for credit, and for a long time, this was their sole business. They would take deposits from people and pay interest on those deposits, and then lend that money out to people and businesses to expand their business or buy real estate, and that was how they operated. But over the last 100 years, they've greatly expanded their list of services that they offer. And while loans and mortgages are still the bulk of Canadian banks' business, they have expanded into other services, like they now offer a multitude of different types of accounts, from regular deposit, checking and savings accounts, to education accounts, RSPs, tax-free savings account, and others. Usually banks now offer financial planning and advice to their clients, as well as talking about other types of investments that they can make. Over the last 30 years, with the surge of computer and internet use and the introduction of debit and credit cards gaining more and more prominence in our society, and the fact that now most employers pay their employees through direct deposit, the Canadian banks are now involved in the vast majority of financial transactions that happen in the country. Cash is beginning to be used less and less. And then along comes things like the COVID-19 pandemic, and there were a large number of businesses that weren't even accepting cash for a little while. They were only accepting card transactions. And perhaps we'll see in the future a somewhat cashless society where all transactions are done electronically. So back to our initial question, why do we need banks? Why can't we just keep our money under our mattress at home? Well, for a long time, that's what Canadians did. They kept their money at home in a drawer or in a jar or in a safe. But people began to get worried about being robbed or their house burning down and losing everything. And at the same time, the public's perception of the safety of the banking system greatly increased, to the point where now the vast majority of Canadians keep most of their money in a bank because the public trust is very high. This public trust in the banking system is essential for the survival of our economy and the economic security of our country. At this point, the Canadian banking system is so ingrained in our daily lives that we don't even really think about it. We go to work, our employer deposits our income directly into our bank account. We use our debit card or our credit card to make purchases. If we want to get a loan for a house or a car or something else, we can go down to our local institution or even apply online for that type of service. There are investments that banks offer, and the public trust is high in these institutions. There are 5 major banks in Canada. You've probably heard of them. They're sometimes called the Big Five, and they all have acronyms because their names are too long. We have RBC, which is Royal Bank, CIBC, the Canadian Imperial Bank of Commerce, BMO, which is Bank of Montreal, BNS, which is the Bank of Nova Scotia, and TD, Toronto Dominion. But other than these Big Five banks, also locally we have what's known as credit unions. You may be familiar with the 2 main credit unions in British Columbia are Vancity and Coast Capital Savings. They offer many of the same services of the Big Five banks, except they're not operated as a for-profit enterprise like the banks are, and so they tend to be a little bit more community-minded. Most kids simply end up banking at the institution that their parents use. Their parents may have opened them an account when they were younger, and it's easier just to stay there. And in reality, unless you have really complex banking needs, it doesn't really matter which bank you use because they all offer similar services. Let's take a look at some of the services that banks offer. All banks offer the standard checking and savings account where you would deposit your money if you want to save up, and it can be attached to an ATM card, a debit card that you can use in the machine or to buy things at a store. And then there are registered accounts such as RSPs, RESPs, and tax-free savings accounts. All of these are registered with the government and are used for various reasons. RSPs are typically an account that you use to save up for retirement that allows deposits and income within the plan to grow tax-free. Our ESPs are an education savings account that parents generally open for their kids. And then the tax-free savings account is an investment account that you can use where all the growth within the account is tax-free. All of these registered accounts tend to have limitations around how and when you can use them and how much money you can deposit into them. And banks also offer a range of investment products. There are simple investments such as a term deposit, like a guaranteed investment certificate, where you would deposit a certain amount of money with the bank for a given amount of time and earn a specific amount of interest. And then on top of that, there is mutual funds, which are collections of stocks that you can buy a little bit at a time within a banking institution. A lot of people choose to purchase those investments within a tax-free savings account or an RSP so that the income is taxed more favorably. On the loan side, the most common loan products that banks sell are mortgages, which are specific to houses. It's a loan to buy a house or property. Then there are personal loans if you want to buy a vehicle or buy something else. And then there's something called a line of credit or a revolving loan, which is where you have credit available to you that you can use whenever you like without having to reapply for it. All these accounts that I've mentioned so far tend to be for people, they're personal accounts, but all the banks also offer accounts for businesses, and they're similar types of accounts, but they're for businesses. They can do business loans or business deposit accounts or business investments as well. So now you know a little bit about the history of the banking system in Canada and what kind of services the banks offer. We're going to be going into detail on these different types of accounts in the next video, so stay tuned.